Income tax 2020. Interest income. Come in, relax with income tax 2020. Interest income. With regards to our income tax formula, we're going to be up top in the income line, remembering that we can basically cut this in half, this formula in half, the top half basically being a modified income statement, the bottom half then being the calculation of the tax, then applying the payments and credits to it to get to the bottom line, the tax refund or amounts due. We're focusing here up top on basically the income statement half of things, which is usually revenue minus expenses, income minus deductions in our case. And we're looking at the income line, thinking about a specific category, common category of income, that being then interest income. As we think of income, normally our questions then are going to be, one, does it have to be included in income or not? Because remember, we would rather it not be included in income, because that's probably going to lead to us paying more taxes. And then two, if it is included, then what rate is it going to be taxed at? Is it going to be taxed at ordinary rates, the progressive tax rate that would be applicable, or is there some kind of special rate for the interest income? So let's go into that here. So interest income reported on 1099 interest, INT. So usually when you have interest income, it's going to be from like a bank or a financial institution or something like that. The IRS actually sent out a lot of interest in this year in 2020 because for some people may have paid on time and there was an extension, so you might get a 1099 INT from the IRS as well, and that's going to be the indication that you're going to be recording interest income. Remember that anytime you get a 1099, you're typically thinking that's an income type of form. Someone who paid something to you, most likely, then is basically reporting to the IRS that you got something that could potentially be included in income. And whenever you get the 1099 INT, your mindset is saying this is also going to the IRS, and therefore we have to record it on the return, or else it's probably going to cause a problem if we do not. In other words, the financial institution sent the 1099, for example, to you. They sent it to the IRS. You might have a situation where a client says, hey, look, that interest number is wrong. The 1099 is wrong. And we're going to have to say, well, if it's wrong, then we need to either use the number, or you need to go back to the person that issued the 1099 so that they can then correct it to the IRS. Otherwise, generally, if we put some number other than what's on the 1099, then it's not going to match up with what's on the IRS who has it, and we're probably going to get a letter about it in the future. So we either deal with it now or we deal with it then. If you can get the person who issued the 1099 to adjust it, it would be better to deal with it now. We might as well deal with it now if possible. So you're going to probably get the 1099 interest from a bank or from a savings and loan from the credit union. So the financial institutions that might be paying you interest, then of course would be issuing the 1099 INT. Some interest income is tax exempt. Generally, tax exempt interest is from the government. So oftentimes you might have a form of interest that's going to be tax exempt. Possibly you're investing in government bonds of some shape or some way, shape, or form. And in order to incentivize the investment in, say, government bonds, the IRS, the law, the government will basically make the interest that you would be receiving from them tax exempt. So that's going to be one of the benefits you will have. You'll typically still get a 1099 interest, but the exempt income will be in a separate area. Let's take a look at it. This is going to be the 1099 INT. So you could get many different types of 1099s, so you kind of want to sort them out in your mind. But whenever it's a 1099, you're thinking that that's potentially income. That's potentially income I got to record somewhere on the return, most likely. And you're thinking the IRS has a copy of this, and these two things need to line up with what is on the IRS's books. So we have the payer's name, street address, city, town, and so on and so forth. The payer's RTN, which is optional. Then we've got the payer's TIN, recipient's TIN, recipient's name, street address, city, town, account number, and so on. Then we've got the payers, let's go to box one. Box one is the interest income. That's going to be the typical field that you will have if it's normal interest from like a bank. If it's going to be typically taxable interest, it'll be there in box one. Early withdrawal penalty, so if applicable, not often the case. You don't typically have that, but you may. Interest on U.S. saving bond or treasury obligation. So this is going to be in a separate box if it's on the U.S. bonds or treasury obligation. Federal income tax withheld, if they withheld any amount for this income, which they could do, probably will not do. You probably will not see that box populated very often. Investment expenses, box 5, foreign tax paid. So once again, if foreign taxes were paid, probably, not usually the case. Foreign country or U.S. possession, and then 8, tax exempt interest. So if it's tax exempt, it might be here in box 8. Now notice if it's exempt, if we're not going to be paying taxes on it, it's exempt from us having to pay taxes, and therefore we can think of it as basically not being something that's included in income, the first line item. We still are going to include it typically in the tax return, but it's going to be in the tax exempt category just to report it, and it will not basically feed over into the taxable income, which will then be paid tax on. So we'll include it for reporting purposes, even though it's not included in the tax calculation generally. Specified private activity bond interest, market discount bond premium on treasury obligations, bond premium on tax exempt bond, and tax exempt and tax credit bond. Now, normally the 1099 INT is fairly straightforward to just record the interest, or to be recording, say, tax exempt interest, to put that into the tax software if you're using tax software. But if you have questions, if there's anything unusual, you have the instructions typically on the back or included with the 1099. If you do not have them with the 1099, you can look them up on the IRS website. Just simply pull up the 1099 INT, and then you'll have the instructions included within them. You'll also have the instructions if you look up 1099 INT instructions. You can see here you got the box by box instructions. So if you get a box here and you're like, I don't know what that is, then you can go and get more detail from here and then go from there with further research. So this is more instructions that would be included. Other interest that must be reported would include imputed interest on loans made at below market interest rates. So this is going to be uncommon, but just note that if a loan was made and someone loaned money and they loaned money at a rate that was below the market rate, well then we're going to assume that there's imputed interest involved there. We're going to have to calculate that there's some kind of interest that's worked into that agreement, because if it's a market transaction, then you should have market rates, and it doesn't make sense that there's not market rates. Something's funny's going on there, so you'd have imputed interest. So interest on bonds sold between interest dates. So if you had between the interest dates bonds were sold, then you could have a situation there. You'd have to include the interest as well. So the Form 1040, interest is going to be down here, so we're in the top of the actual calculation. So everything from up top here is kind of like the information, filing status, information, dependents. Then we've got the wages that were in box 1, box 2. Also income, it's going to be the tax exempt interest, and then the taxable interest, Schedule B if required. Now, we'll see this in more detail when we go to the example software in a future presentation. So I know it's kind of small right here, but the point is it's going to be on page 1 of the 1040, and then if it's over the 1,500, we're also going to be including a Schedule B to break out. So this is going to be the Schedule B that will feed into the 1040, which will look like this: interest and ordinary dividends, the top portion of it being interest, where we will list out the interest payments that we are receiving, the different 1099s that we may have gotten, that will then add up at the bottom line. And then line 4 here is going to be enter the result, and on form 1040 or 1040 on line 2B, which we saw up top. So it's going to be supporting the 1040.